heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's world headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we'll talk the state of fintech and, of course, earnings with the CEO of SoFi as the company beats and raises its revenue forecast for the year.
Plus, President Biden plans to issue a sweeping executive order on artificial intelligence today. We'll break down the details and its impact.
And we push ahead to the all-important Apple event of the year. It's the last one they have, and it's set to unveil 2 new Macs and processors later tonight at the Scary Fest. But first, let's check in on these markets because, look, there's a tug of war going on, whether it's geopolitics on the one side, whether or not it's, well, questions of whether the direction of travel we sold off too far too fast when it comes to tech. We're actually seeing money move into stock markets today, particularly the NASDAQ up a percentage point. Other benchmarks, well, rallying off of what have been oversold territory, particularly as geopolitics still does swell. And we're seeing some concerns about the conflict in the Middle East, but maybe not escalating the way that many had imagined. So we actually see perhaps a move out of some of the havens of choice. Yields actually pushing up on the 10-year yield. It's notable, though, also we've got the all-important Fed, and we've also got, of course, what we see from the Treasury in terms of bond issuance coming up for the last quarter in the next year. We're looking at crude just off by 3.5%, that really playing into perhaps some of the anxiety, just pulling back ever so slightly, cautiously, when it comes to, of course, Israel and Hamas. Let's move on and have a little look at, well, the risk asset of choice when it comes to the Bloomberg Technology. We're looking at crypto. Look, actually, not much volatility on a day where actually we've seen such buying in the previous week. There is still thin liquidity here, Ed, but we're seeing 34,000, a level that's being sustained for now. That's as the dollar is on the downside.
Yep, 3 single names I'm watching. The first is Apple. You have the Scary Fast event this evening. The expectation, a new iMac and an updated higher-end MacBook Pro, but also an emphasis on chips. We think they'll unveil the M3, latest generation processor. The stock being supported up 1%, then we get earnings on Thursday. Big week for Apple. Meta, actually some news out of Europe. The stock up 2.5%. We will have an ad-free, subscription-based version of the Facebook app and Instagram. That supported the stock in the session. One interesting name that we're watching is kind of the main one of the show is SoFi. This is an earnings story. We're down 1.7%. Following the open, we were up almost 15%. That is a big swing now to the downside, down 1.5%. Upgrading revenue guidance for the year, beating expectations on that front. Deposits tripling from a year ago and coming in ahead of expectations. But this is a really interesting stock reaction. Strange one, Caro.
And funnily enough, I'm pretty sure our next guest doesn't always want to talk about stock reaction, but will want to talk a bit more about the numbers. Let's bring in SoFi CEO Anthony Noto. And I'm sure you're going to say, oh, we don't go by the day-by-day fluctuations. What do you make, though, of the optimism originally seen around the numbers? And what more do you want to say to an investor base that maybe just, or maybe will take some profit on the day?
Well, first, thank you for having me. What I'd say is we're really excited about the results that we delivered today. I think they're extraordinary in a number of different ways and equally as positive on the outlook. There's very few companies that are driving durable growth the way we are, plus 25% revenue growth, really strong member growth at 47% accelerated. We had a record number of new members added as well as products, which is a testament to the value proposition that we're delivering. Our profitability continues to improve. We now have all 3 of our business segments that are profitable, that being the lending products as well as tech platform and now financial services. 67% growth in our absolute dollars on a year-over-year basis from non-lending, and that will continue to be the driver of the growth of the company. And we meaningfully grew tangible book value over the trailing 12 months of about $170 million. So I feel like we're executing across the board on both growth and profitability and shareholder value, and it's just a matter of time before that's reflected in the stock. We just have to keep delivering the way we have been.
Anthony, it was interesting to listen to you on the call. You kind of really talked up the non-lending parts of the business, particularly going into 2024. Are those going to continue to be more of a growth driver for you than the lending business?
That's correct. They've reached the size in terms of their absolute scale where their absolute growth in dollars is meaningful, at 2/3 of the overall growth in dollars, and they're profitable, which means we can now start investing even more in them and have them grow faster than the lending businesses. And so the way we talked about on the call is that I would expect tech platform and financial services to be the driver of growth and lending to be additive to growth, which is the opposite of what happened so far this year.
The interest rate environment is really interesting because some of your sort of technology-focused peers, Lending Club being an example, are struggling. They've gone through a round of job cuts, for example. I look at deposits tripling from a year ago. What is the principal driver of that traction you're getting? Why are you able to perform when similar business models are not?
The thing that we're benefiting from is that we have a great diversification because of our strategy. So our goal is to help our members on all the most important days in their lives and all the days in between from a financial perspective. That results in us having 9 different businesses. Some do really well in a high rate environment. Some will do better in a low rate environment. Right now, the strength that we're seeing is behind our flagship product, SoFi Money, which is the best of checking and savings in one account. We give you all the great functionality that a digital operator can provide, in addition to additional benefits like 2-day early paycheck, and then most significantly, a very unique interest rate at 4.6% APY, no fees, and the ability to get a free certified financial planner and up to $2 million of FDIC insurance. So it's a very unique product. It's helped us grow at the top of our funnel, and then we see great cross-buying from that product as well as others. So the diversification we have is definitely helping. Having both lending businesses and depository businesses are also very unique. And then, of course, our investing business is a great cross-buy product on top of that. One thing a lot of investors don't know in the retail sector about SoFi is we have a third business, our technology platform business, which is leveraging the technology that we use to build SoFi for other partners. There's about 135 million accounts that sit on top of that technology platform. We often talk about it as the fintech of the AWS of fintech because we enable 8 billion transactions a year across that platform.
Let's talk about, in that offering, Connector, the natural language AI-driven, I think it's like an intelligent digital assistant, basically. How much has AI been a driver of getting clients excited of your technology offering?
It's a small piece. As you mentioned, we have a whole portfolio of products in our tech platform, one of which is a chatbot for customer service. It helps reduce the time to resolution and reduce the context per customer. It does leverage AI, natural language AI, in answering the questions that our members have. They really like the product and it improves satisfaction. It's a product we're offering to financial institutions, but we're also increasingly offering it to people that are not currently using some of our other products. So it's a standalone product that's in the cloud.
What you're also offering, and the retail side of your business in particular, is IPOs. Of course, this has been an interesting thing that we've heard, particularly AI-related stories around Arm, which I know that you were helping sell down to some retail investors, but also you're on the Instacart deal and Oddity Tech. How much will the IPO pipeline benefit you, do you think?
The IPO pipeline has 2 benefits. The first is it's a direct revenue stream, which isn't that meaningful. But what is more meaningful is that this is a unique product that Main Street investors, retail investors, typically do not have access to. So we're giving them access to IPOs at IPO prices, and that helps drive more desire to become a SoFi member, as well as it increases AUM in our invest business. So it indirectly drives the business in a unique way. We want to give our members an opportunity to invest over the long term, and giving them more selection, like an IPO at IPO prices, is one way to do that. We're working on alternative asset classes as well. We pioneered fractional shares. We also offer ETFs and robo accounts. So we're trying to be a one-stop shop, not just overall as a company, but within verticals like investing.
Anthony, last week you sold $100 million of personal loans. You talked about it on the call. Who was the buyer?
We don't disclose the individual buyers. We're very pleased with the demand we're seeing for our assets, especially with the fact that rates are starting to hit a ceiling and would likely come down. We've been able to pass on the higher benchmark rates and higher rates for our loans, and that's providing really attractive yields, especially given the fact that we have prime customers with an average FICO score in our loans in the 750 range, and really high yields. So we've had a number of counterparties that we're now now making partners. And one of them, as was mentioned in the call, was for a $100 million deal that will evolve into a $2 billion forward flow. In addition to that, we filed a securitization with BlackRock for $375 million. So a lot more to come on the loan asset side of the equation, but coming at rates that are pretty attractive relative to our balance sheet.
All right, SoFi CEO Anthony Noto, good to catch up. Thank you for joining us on this busy earnings morning. Okay, later today, President Joe Biden will sign an executive order on artificial intelligence regulation, his most significant action yet to rein in the emerging technology. For more on the details, let's bring in Bloomberg's Akayla Gardner. So, what's in this EO?
Yeah, this EO, as you mentioned, is a lot more sweeping than we were expecting. We initially thought it was just going to cover how the government uses AI. This is going to have wide-reaching impacts on the private sector, on civil society, and the biggest takeaway here is the White House is using a law called the Defense Production Act to basically force major developments to submit to safety tests. So they will have to submit those tests to the government before they can be used for public release. Now, this is not everyone. This is only powerful systems that are above a certain threshold, and that could potentially pose risk to national security, pose economic risk, and that's going to have a big impact on companies like Amazon, Google. And another major takeaway that will be very familiar to people at home is they're also instructing the Commerce Department to start developing technology for watermarking. So when you see those deep fakes, video, audio even, they want there to be some sort of signal to American people that this is authentic, that this is a piece of AI, and they should know that this is not disinformation or misinformation. So those are the biggest major takeaways, certainly sweeping, but will certainly depend on these agencies to enforce some of these targets.
It's interesting you mentioned the word signaling to, well, at the moment, the voters, the people, but they're signaling to companies here, they're signaling indeed that a lot of the heavy lifting does fall upon the agencies once again. There's about, 15 companies going to be there at the signing. What have the reaction really been there?
Yeah, something that's interesting about this EO is it largely builds off of voluntary commitments that 15 major companies made this summer. That's Amazon, Facebook, Google. All of these major technology companies signed on to basically commit to some of the things that are already in this EO. And we're going to see all of these companies standing alongside the president today as he signs this EO, really signaling that they want to be a part of this process. And ultimately, they could be preventing themselves more harm down the line if they show now that they are willing to cooperate, that they're willing to put safeguards on this type of technology. And I think that's exactly what we're going to see today.
We thank you, Akayla Gardner, who's going to be getting back to that EO all-important signing. And really, what this means for corporate America, global viewpoints on AI and the guardrails that are being put into place. Let's talk about it more with Rama Aluru, a Senior Director for Society and Intellectual Property at the Special Competitive Studies Project. Previously, you served as Director of Research Analysis of the National Security Commission on Artificial Intelligence. Therefore, Rama, perfect voice. From the perspective that this is America trying to say that they are taking the biggest steps thus far by the world in terms of putting guardrails on the future development of AI, do you think that this really is showing that?
This is a historic moment for our country. America is leading in cutting-edge frontier AI models, and now we're leading in AI governance. So it's a signal domestically and globally that we are committed to AI governance and not stifling this innovation.
Some of the directives aren't enforceable, as we're hearing. I mean, a lot of the overall legwork, heavy lifting is going to be done by some of these agencies. And indeed, perhaps yet further legislation is really needed to come from Congress, particularly when it comes for privacy. From your perspective, does this have real teeth, or is this more about signal?
I think it's both. This is definitely a great start. The EO will have timelines on when departments and agencies need to work and implement these directives. And so I think that is where the hard work is going to start, is when we are implementing and enforcing this directive.
Rama, the principal mechanism that the executive order outlines is that any company building a next generation large language model, as opposed to one that's currently in existence, has to submit it to the government for a safety review before it's put into the public domain. Is that an effective tool tool, to your mind, to meet the goals of this administration in the field of AI?
Absolutely. But first, we need standards and metrics to audit those AI systems. So I expect that the executive order will put out a directive to the national, to NIST, to come up with those standards and metrics for auditing AI systems before they're adopted across departments and agencies. So I do think it'll be effective, but we still have a lot to work to do.
What's the intellectual property story here? If you're getting government oversight and you're directing agencies to put watermarks on content made by a private entity?
So AI is going to have a lot of implications on our existing systems, like our patent regime and our copyright regimes. And as you said, for standards for provenance and authenticity. So, for example, I think that the AI implications on the patent regime means that we have to see what implications this has for our existing patent regime and our existing laws to see what we may need to change. And the same for the copyright regime. And also, there are harms when we don't know whether information in the digital domain is real or if it's been generated by AI or if it's authentic. So we do need safety mechanisms to make sure that when information is generated by AI or when AI has been used, that we know that that's what's happening.
Rama, your own project, the Special Competitive Studies Project, is a fascinating one and in many ways led by Eric Schmidt. And the whole idea is sort of ways in which you can strengthen America's own competitiveness within technological developments, particularly in the world of AI. When it comes to competitiveness, how much do you think it will be fostered or stifled by the fact that it's not just America, but we also need guardrails put in place globally? We've got the UK about to have its AI summit, for example. Is there going to have to be some competitiveness given up for safety?
Well, I think we definitely need our partners and allies in this tech competition. We can't do it alone. So there needs to be alignment with our existing safeguards on trustworthiness, on safety, on security, making sure that these technologies are fair and responsible. So I think that our nations, our partners and allies do need to work together to make sure that our governance mechanisms do align so that we do have mechanisms for data flow, so that we have mechanisms to reach each other's markets.
Well said, Rama.
And in that sense, there's healthy competition.
No, so please finish your thought.
Thank you. In that sense, there is healthy competition, right? So we want everyone to operate according to the rules of the road. That's when we can get healthy competition and make sure that we're innovating the way that we want to be innovating.
Well, here come those rules of the road, we see. Rama Aluru, thank you so much for some time. Special Competitive Studies Project, we thank her for joining. Meanwhile, coming up, look, the California governor, Gavin Newsom, wraps up his China trip with a tour of Tesla's factory. We'll have more on that next. And Ed, look, you're watching the shares.
Yeah, Tesla down more than 4%, on track for its biggest drop in a couple of weeks, lowest level since May. Two pieces of news. Panasonic kind of indicating through their first loss in 3 quarters that there's pretty lackluster demand for Model S and Model X, translating through to their cell demand. But also BYD, big competitor of Tesla's in the China market, having strong financial results this Monday. Both those things weighing on Tesla's shares, down 4%, their lowest level since May. This is Bloomberg Technology. It's time for Talking Tech. First up, California Governor Gavin Newsom wrapped up his China tour with a visit to Tesla's Shanghai factory. Newsom was accompanied by his delegation and China-based Tesla executives. The Shanghai plant accounts for more than half of Tesla's global production. Plus, Panasonic's automotive batteries operations fell to their first loss in 3 quarters on lackluster demand for Tesla's Model S and Model X cars. Demand shifted to Tesla models priced below the $80,000 threshold, eligible for tax incentives, hurting the Japanese supplier's profitability in the September quarter. Plus, Meta will offer users in Europe ad-free access to Facebook and Instagram for a subscription fee after courts in the region began cracking down on the way social media companies treat data. The subscription will cost €9.99 a month on the web or €12.99 a month on iOS and on Android. Caroline.
And in many ways, that's responding to, well, European views on control and indeed some strength in the market that certainly Meta has. And that's an ongoing narrative here in the US as well, Ed, because today Google CEO Sundar Pichai is testifying today in the company's antitrust trial. We just want to get you up to speed with what's happening because the star witness is giving testimony. Bloomberg's Todd Shields is here with more. And really, this is about Sundar Pichai's push to try and convince, basically, amid the trial, that they were doing this not to just monopolize the market. They were really worried about a competitive threat here.
Yes, throughout the trial, and we're in day 30 now, so this is not a short proceeding, but the Google side of the case, if you will, is just commencing. We're about midway through. And throughout, heavy-duty payments to Apple and others for default position have been one of the main issues. The government, which says that Google illegally monopolizes search, maintains its monopoly through illegal means. The government says those expensive default payments, amounting as much as $26 billion a year, basically foreclose competition. Everybody uses the defaults. No other search engines can breathe, if you will. Google says we're in a very intensely competitive world, and we need to do what we can, or else we're going to be yesterday's roadkill. So the CEO today will be leaning on the latter side of that equation.
We've known for a long, long time that Google dominates search, but I think at the core of what Pichai is trying to argue, right, is that how consumers consume technology is changing, the world around them is changing, and therefore they are at threat in that market position, Todd.
Right. So there are threats from Google's point of view from places like the search within Amazon, search within TikTok. You go to Expedia for travel search. Who knows what other search services are going to pop up and potentially undermine Google. And, we know from the history of tech, there's roadkill that looked really big a long time ago. I heard something about MySpace on radio the other day, and I thought, wow, and there's a blast from the past, but that was big back in the earlier eons and disappeared rapidly. So you never know, I think, is Google's main point. And they say everything we're doing is legal so far, and it's legal. It's justified.
That is a blast from the past. Bloomberg's Todd Shields, thank you very much.
Welcome back to Bloomberg Technology. I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco. European markets have just closed, and for 1 week and 1 week only, we will be bringing European market close daily here on Bloomberg Technology. The Stoxx 600 Europe, which is a benchmark of equities across 17 European countries, starting the week with a modest 0.4% gain after 2 straight weekly declines. If there's any one big piece of movement in European trading, it's Brent, the sort of more global benchmark for oil, which is moving to the downside off almost 3% because of what we've seen in the Israel-Hamas war and the escalation of military activity over the weekend. The other thing is the eco component. We got GDP data and inflation data out of Germany better than expected. We saw bond yields pair declines as a result, and also the euro strengthen against the dollar. It had been a little bit lower before that echo data came out, Caroline. But that's the European picture, and as I said, for 1 week only, we'll bring it to you daily.
Oh, and what a joy it's going to be for this week. Meanwhile, let's check in on these markets here and across the Atlantic. And currently the United States is, seeing a little bit of desire to be getting back into some of the oversold nature of the NASDAQ and the S&P 500, currently up about 0.6%. Look, we're coming off the highs when you're looking overall at where we had been in some of these benchmarks. A lot of this is surrounding, of course, worries about geopolitics at play, conflict in the Middle East, whether or not that will be contained or indeed escalate. But notably, of course, we're also seeing a Federal Reserve this week from a macroeconomic perspective, and indeed whether the US Treasury, how much they're going to be selling bonds. So NASDAQ currently up 0.6% if you're looking at the NASDAQ 100, the big tech players. I'm looking at Tesla, though, weighing that down on one particular side. In fact, it's the worst performer in terms of points movement on some of these benchmarks. We're off by 4.2%. You outlined why, Ed, and a lot of this is to do with the signals we're getting from Panasonic, the battery part of this equation. They're, of course, saying at the moment that they're seeing a lackluster demand for the Model S, the Model X, and indeed that's been crimping their own sales. But we've also been seeing the competition from BYD over in China. Really interesting that, of course, because of some of that narrative around the chip makers, we are seeing overall the SoFi down. In fact, only 4 players in the green on the semiconductor chip index today. And we're going to dig into why in a little bit. One key player we've got coming up, as I'm just shining light, that it's up by 2% almost on the day.
Yeah, you're talking about shares of semiconductor manufacturer On Semi. They're down now more than 19%. That puts it on track for its biggest drop since March of 2020. The stock trading at its lowest level since January of this year. We're going to bring in On Semi CEO Hassan El-Khoury. And Hassan, this is really about the outlook you gave for the fourth quarter coming in below expectations. I guess, what is the fourth quarter outlook dictated by? What are you seeing in your end markets?
Yeah, all of it is it's a demand environment. If you think about it, we've always known the softness in industrial. We've outlined that in the prior quarters. We added to that, the softness that we're seeing, or pockets of softness that we are seeing from customers as they digest through the inventory. And the inventory is really related to the end demand softening in automotive. So you couple these two with demand being impacted by interest rates, and you give the guide that we've outlined, which is a softer guide than we've seen, with a single outlier of a customer, which is also demand that is the biggest impact, which is an automotive OEM in North America.
Hassan, is there a tangible impact from what we've seen in the strikes here in North America?
You're referring to the UAW strikes. We don't see a direct impact. It's not really baked in. There's no tangible impact that we can pinpoint to. But again, it's the impact is not going to happen in a quarter. If there is impact, it will be in the outer quarter. But given the macro uncertainty that we've had, that's not going to be really an outlier that we have to consider.
Hassan, you've therefore outlined that there's one key player in particular that's impacted your numbers. Can you say who?
No, I'd rather not get into customer specifics.
When we do get specifics, can I ask specifically about your relationship with some of the Chinese manufacturers? Because you do have relationships there, and geopolitics has been tough in that arena, to say the very least. How do you see your ongoing relationship with China more broadly?
I think our relationship with Chinese OEM, specifically on the EV side, is very positive. In my prepared remarks this morning, I talked about the fact we are engaged with long-term agreements with 4 of the top 5 China OEMs that are the leading EV OEMs. We've also renewed our engagement with NIO that extends towards the end of the decade to 2031 with their new generation. So the relationship is very, very positive. It is incremental for us. So I know there's a lot of backdrop about demand in China, but demand is going up in China. Demand is going up in EVs worldwide. I know there's a lot of stories about softening demand, but that doesn't mean demand is going down. Demand's actually increasing. It's also increasing in the fourth quarter for us and through 2024. And that also relates to some of the China business that we have, which has been positive because we're a share gainer over there. We came from a very small revenue penetration, and that's going to be increasing. So any additional EVs in China is actually incremental revenue for us.
Hassan, I always think about the On Semi story, or the mainstay of it being silicon carbide going into either battery or power management kit in autos or industrial. And, you've painted this kind of broad weakness. But within the universe you serve, where's the strength? Are there specific industries who are just gobbling up silicon carbide chips as fast as they can right now?
So I would start with the biggest industry taking silicon carbide chips is the automotive industry, or the e-mobility, EV specifically. Tangential to that, which is driven by it, and also a consequence of it, is energy infrastructure, whether it's the charging stations, or more importantly, the energy storage systems to complement the grid. That's actually been a very positive and very strong demand environment for us in the industrial. Although industrial in general has been weak, specifically the energy infrastructure has been a very positive and very strong, going over 50% growth for us, and will continue to do so for the remainder of 23 into 2024. So those two big macro or mega trends that have been fueling the silicon carbide adoption are still here and still driving adoption.
And you've been trying to paint a picture of your supply chain as well, being able to feed that sort of demand, and talking about South Korea as well, the ramp there. We're looking at some charts as you speak, Hassan, and they're pretty brutal, to be perfectly honest. We're off by 20% on the day. It was a complete leg down over the last couple of days. How do you respond to those sorts of selling pressures from an investor base? How do you manage your own talent pool at this time?
I look at the reaction as I would say, a momentary short-term reaction. It is not a reaction that reflects our long-term view of the business. We'll get through it. I think it's a buying opportunity for a lot of the long shareholders that we have. Employees see it the same way. From us internally, our employees are pumped up. They've been over-executing and really delivering beyond our goals. Specifically, for example, we talked about silicon carbide. We've been very bullish about the outlook or multi-year outlook of electric vehicles. We maintain that strategic view and that positive view. Our employees see it. The talent that we are recruiting see the leadership being built, and that's what we're really basing our energy on. Whatever happens today is again, it's a temporary, whether it's a day, a week, a quarter, it doesn't really matter. We don't manage the company on a quarter to quarter or week on week. We manage it really on a long term, and that's where our investments have been going.
We thank you for spelling that out for us. Hassan El-Khoury is the onsemi CEO. Great to have some time with you. Meanwhile, let's stick on the theme of chips. Broadcom and the software maker VMware, they're saying their $61 billion merger is on track to close before a November deadline. This is despite still not receiving approval thus far from the Chinese regulators. Now, the companies did not disclose how close they actually may be for an approval from China, but they've stated that there is, quote, no legal impediment in closing under US regulations. The agreement between the companies expires November 26th, Ed.
Right, coming up here on Bloomberg Technology, we're going to talk all about AI regulation being in the spotlight. We're going to speak with James Green, General Partner at CRV next, and then Dr. Fei-Fei Li, Sequoia Professor in the Computer Science Department at Stanford University and a big name in the world of AI. That's coming up next. This is Bloomberg Technology.
It would be preferable to have a global framework. What we have done around the whole question on climate, we could actually also apply to have an international energy association also for AI. But given the context in which we are in, it will be very difficult to assume that it's going to happen now.
That was AXA CEO Thomas Buberl discussing concerns around artificial intelligence, how to regulate it. It's time now for our VC Spotlight, where we talk about how you play the investment field given those concerns. Joining us now, James Green, General Partner at CRV. We kind of had this big picture look today, right? The Biden executive order on regulating AI. The UK will consider that tomorrow. And yet at the early stage, so much work is going on to develop the technology. So where do you start?
Oh, it's so interesting right now. I think the reality is that with where we've been investing for 53 years, you always have to start with the people. And so CRV is taking the approach that we are investing at the earliest stages with people and in broad markets. It's very unclear where the market's going to go. I think even if you just look today with the Biden administration and their executive order, as well as the EU Act, which remains to be seen where it comes down, we're kind of finding different areas to start with security, with dev tools, with applications. There's multiple different areas we're spending time.
The main mechanism outlined in the EO is that a maker of large language models, future generations of large language models, must run them by the government and let them review them for safety before opening up to the public.
Yeah.
Does that impact on how attractive a startup that is building its own foundation model may be as an investment?
Yeah, I think it's interesting. With the firms that are making their own foundational models, so think OpenAI in the US or DeepMind or Mistral in the EU, I still believe there's going to be huge outlier companies in that category. I believe that OpenAI, as well as the open source software companies, will still be very interesting. There will be regulation, but much like CCPA and GDPR, there'll be companies that come around out of those.
So where to allocate in this environment, James? If it's not the big makers, the foundational layers, where is the application so nuanced, so necessary that it will be walled off, that there will be enough barricades for a company to really survive in that?
Yeah, I think at the application layer, there'll be lots of different areas that people can survive coming from. We recently invested in a company called Zero, which is using AI for field sales. And that, like many others, whether it's developer tools with GitHub and Copilot, there's going to be lots of ways that people can be very successful and build large companies. Some of these companies are growing faster than almost ever before. If you just look at the speed that OpenAI is growing in terms of their revenue growth, that is being paralleled with many, many other companies at the early stage.
Can you, I mean, as a Brit now in America, from Birmingham, we're looking at the UK trying to sort of show off its prowess in the era of AI. You're now based allocating money. Are all the companies you're interested in the West Coast? Are they international? Are they US primarily? Where are you looking for it, James?
That's a great question. CIB has been investing all over the world for most of its 53-year period. We've been investing in the West Coast. We started in the East Coast. We invest in Europe, Israel, LATAM. So that will continue to be the case. Our AI portfolio, unsurprisingly, is very West Coast heavy today. However, with teams coming out of DeepMind in London, which Google acquired, as well as teams coming out of Israel, we're seeing global technical talent building in and around AI applications and infrastructure. So yes, it's currently very heavy on the West Coast, but we'll continue to invest globally.
James Green, General Partner at CRV. We thank him for his expertise. And that was about sort of some of the private talent. What about the talent coming from public pools, particularly from universities? Joining us now, Dr. Fei-Fei Li, Sequoia Professor in the Computer Science Department over at Stanford University, also the author of The Worlds I See, Curiosity, Exploration and Discovery at the Dawn of AI. And this world that you currently see, Doctor, are you seeing enough of that talent coming out of the university with which you sit? Are you worrying, I think in particular, about the money that's necessary to foster that sort of talent?
Thank you, Caroline and Ed, for inviting me here. We are looking at extremely high level of excitement of students majoring in computer science and AI. So as fast as we can train our students, yes, there's a huge amount of excitement and talents going into the space. But where I sit is public sector, is academia, is higher education. I do think that we need a much more investment and resourcing to make sure the public sector development and research of AI stays healthy, is part of the ecosystem and frankly part of the innovation engine of America.
Dr. Li, you met with President Biden and spoke with him in June. He's due to sign into law his executive order for AI standards this afternoon. Based on the fact sheet that's been released and Bloomberg's reporting, which I know you shared on social media, did any of the proposals or recommendations that you made to President Biden end up being in the executive order?
Yeah, Ed, I'm definitely very excited to see all the details of the executive order later this afternoon. But from the fact sheet that I briefly read, I am excited to see the level of comprehensiveness and multifaceted, broad coverage of this EO, especially about the National AI Research Resource, which is called NAIR pilot program. We at Stanford HAI Human Center AI Institute spearheaded this effort back in March 2020 when we wrote an open letter to many university leaders across the country and made this into a first bill under the Trump administration. And after working with Biden White House and NSF, National Science Foundation, for 20 or so months, we actually submitted a plan for National AI Research Resource NAIR to Congress earlier this year. So seeing NAIR being part of the, on the fact sheet, being part of a pilot program coming out of this EO is really exciting. And frankly, I think it's really, we're in dire need. When I say we, it's public sector. Of course, there's a lot more details to be seen,
Yes.
and I really look forward to Congress taking action following this EO.
Dr. Lee, you want to see more support for public sector compute resources and to rebalance the amount of AI development being done in the public sector vis-a-vis industry and government. Why do you want to see that rebalancing?
And I think this is really important for America's leadership. AI is such a critical technology. It's a horizontal technology that is propelling the entirety of our globe, our human, civilization into the next chapter. And we definitely need responsible development. And America's global leadership and its founding democratic values are critical to help usher in this responsible technology. So this is why we need the public sector to be part of the innovation, as we have always done, whether it's biotech or space technology or computers, internet. We have done that as a country, and we need that for AI as well.
You are, of course, the godmother of AI, as many call you, and this isn't just a AI US field, it's a global field. From tomorrow, with the AI discussions happening November 1st in the UK as well, are you hopeful that there will be global guardrails agreed here?
Carolyn, so I'm going to remain cautiously hopeful. I really want to see actions. We have been working with global partners, governments, as a neutral public sector institute. We see a lot of engagement. From that point of view, I am hopeful. And what makes me most hopeful is the young generation now taking so much interest in this technology, not only from tech point of view, but also from policy and society point of view. But I really want to see actual meat on the bone. I want to see action, and we also want to be part of this movement in ushering in a multilateral partnership way this technology.
Dr. Fei-Fei Li of Stanford University, thank you for your time. This is Bloomberg Technology.
It's Apple's final event of the year tonight, and it's capitalizing on a computer market resurgence when the company unveils 2 new Macs and processors, we understand. Mark Gurman is here for more from what we expect from the event called Scary Fast. So I'm thinking speed here.
Speed, indeed, mixed with a bit of Halloween. This is the first time that I can remember that Apple is hosting an event at 5 p.m. Pacific time, 8 p.m. Eastern time, and it's all about the Mac. You'll see a new 24-inch iMac, you'll see new MacBook Pros at the high end, and 3 new chips, the M3, the M3 Pro, and the M3 Max. These are going to be their fastest Mac chips to date, some of the fastest chips built on this ARM architecture that you've seen from any computer manufacturer. So for those in the market for a new Mac, or those who love the speeds and feeds, this event tonight is probably for you.
Can't wait to see what the Halloween vibes are too. Mark Gurman, always there to tell us what's coming up before the company actually tells us. We appreciate it. Meanwhile, that does it from this edition of Bloomberg Technology, Ed.
Yeah, big thanks to everyone out there in the audience that's been tuning into the podcast. You can find the podcast on all the Bloomberg platforms, but also on Apple, Spotify, and iHeart. We always publish the show, and we know that a lot of you have been tuning in, so thank you very much for that. From New York City and here in San Francisco, a really big week ahead. This is Bloomberg Technology.